He runs the UK's top performing fund across all sectors. Ian Williams is our guest today. He's the chairman and CEO, really, of Charteris. So welcome, Ian.
Okay.
Yeah, we were on a panel together yesterday.
That's right,
You had some comments that were outside of the box that I invite you to share today in terms of the gold space. How do you see the metal set up right now?
Okay, we think the outlook's okay. I mean, there's tremendous value in the sector, but there's also extreme investor disinterest in the sector. I mean, investors are just ignoring it, really. There's a lot of embedded value there. The companies are actually in much better shape than they've been for years. They've all been paying down debt. They've all accumulated cash. So there's a lot of good things happening, but it needs a catalyst. It needs something to get it going.
Is it really just a lack of a rally here that's causing this interest, or do you think there's more to it?
Yeah, I mean, it's a self-perpetuating thing, really. It's because the price is dormant. Silver has never known silver be so less volatile than it is today. So investors look at it and think, well, there's nothing happening there. Whereas, Amazon are up 10% this year or whatever. So a lot of investor interest has moved away into other sectors.
Cryptos?
Cryptos, yeah.
The tech sector?
Tech sector, yeah.
We saw Paulson, they don't want to say they closed down the fund, but they basically closed down their fund.
It's a function of lack of investor interest, really, and people haven't been making money in the sector over the last couple of years. People have lost interest in it. They moved away.
Right. Well, what about the mining sector, though, Ian? Don't you think that there's some good buys here right now? Opportunity for people to make money?
I mean, we met last 2 or 3 weeks in London. We met a lot of CEOs of the stocks we all invest in the fund. Because they all come over for the Zurich Gold Show, so we tend to meet them all in big lumps. And every single one of the companies seems to be in much better shape than when we saw them a year ago or 2 years ago. They've all really...
Are there some picks you like that you can talk about?
Well, our fund is a bit unique in that it's like 65% in silver miners rather than gold miners. And we tend to meet the companies we invest in because we want updates on what's happening. So we're invested in Fortuna Silver, we're invested in Mag Silver, Endeavour Silver, Pan American Silver. I mean, we've got all the top quality producing silver miners. We tend to own.
So no juniors.
We don't buy exploration stocks. We just won't buy. We don't buy the large cap miners like Barrick because most of those big ones have got declining production profiles, and we don't buy the small exploration companies because we think the risks far outweigh the rewards.
Along the lines of this interest that we're seeing in the gold space, Warren Buffett came out saying that gold has severely underperformed equities over the last 50 years. So I guess by this track record, what would be the argument of holding gold as a long-term investment?
It's severely outperformed equities since the year 2000. I mean, the trouble with comparisons like that, I mean, you could have any result you want if you're allowed to pick the start date,
So you ignore these comments when you hear them even, brush them aside. Thoughts on where the S&P is headed this year? Do you think we'll continue to see this rally here?
Using Warren Buffett's favorite indicator, which is US stock market cap relative to US GDP, US stocks are almost at a record high level, which presumably is why Buffett's sitting on $112 billion of cash. So the stock market is in very much full valued, maybe overvalued territory. The other big investor class is Treasury bonds and the bond market. It looks like with the Fed raising rates, Jamie Dimon came out and said he thinks Treasury 10 years going from 3 to 4. We agree with that. If it happens, every single investor who owns Treasury bonds is going to lose an awful lot of money. So if you're looking at bear market in bonds, overvalued stock market, that I think is the groundwork for investors to come back to other asset classes to invest in, because it's all a relative game, and the mining sector is cheap. The general run-of-the-mill equities are overvalued. Some tech stocks are way overvalued. And bonds are potentially in a bear market. So you got to put your money somewhere.
Ian Williams, it was an absolute pleasure meeting you, moderating the panel. Thank you so much, and thank you for watching. We'll have more for you on Kitco.com.